Are you thinking of investing in property, and whether that be a portfolio loan or an individual loan? We can help you either way. So the main sort of differences that you'll have between the two is if you go for a portfolio loan and you own plenty of properties, it makes it a lot simpler because you just have one direct debit date, you just have sort of like one renewal date as opposed to loads of different ones scattered throughout the year. It does mean the yield can be a bit lower because you might not be able to get the most competitive rate on the market, but it's really just what your preference would be. There is like lenders that be able to offer to do it. They have like sort of different preferences, so they won't be able to do a single let and a HMO on the same sort of portfolio loan. You'd have to have all HMOs on one, or purchase and remortgage. You can't have those on the same one. You'd have to do them as separate. Also, if you have properties that are in Scotland and you have properties in England, you won't be able to have them on the same loan. If you have 4 properties in Scotland, you could have them on their own loan, but you won't be able to add an England property into the mix. You can sell a property, so if you were to get 5 of your properties on one loan, you are able to sell one of them and you won't have to stop the whole thing or anything like that. You can take that out of the mix. It is something you can do. You're not locked in for the whole term. And it is a good way to equalise loan to value as well. So if you've got a property that has not got the highest rental but it's got quite a lot of value, and you've got another property that has not as high value but the rental's a lot higher, you can mix them and meet in the middle, and then you could get the maximum loan to value that you need out of your property. But yeah, we can help you either way, so get in touch.